sur la famille.
Hi everyone, I'm Nicolas, one of the co-founders and directors of the family. I'm here with my colleague Balthazar de Lavergne on the left, and we're hosting Christophe Janz, who's one of the founders and partners of an early stage VC fund called Point9 Capital. Welcome, Christophe. We're very glad to have you.
Thank you very much. Hi, Nicolas. Hi, Balthazar. Hi to everybody who is listening in or viewing in.
So the idea of this show is very simple. Every week on Monday at 6 p.m. CET, two directors of the family host a guest that is both someone that inspires us and someone that we like to be with, hence the title of the show, In Good Company. And so Christophe and Point9 in general are people that we've been working with for many years, actually. We're shareholders in the same companies. We've been exchanging a lot about the state of VC in Europe and the world. We've been reading your pieces quite a lot because you write a lot. You produce a lot of content that is extremely useful for the European ecosystem. Before we start digging in and hearing your views about the state of this ecosystem and the state of startups and VC at the global level, maybe tell us, how has this year treated you? How has the pandemic impacted you personally, maybe, and of course the firm as well?
Sure. So where to start? Personally, I can't complain, and I hope you're all well and healthy too, and you and your families and loved ones. So fortunately, nobody who was really close to me got sick or seriously sick. And I think the crazy thing is that there is obviously a lot of suffering in the world, and I think and there will be also a lot of bad things still. There is still where basically we don't know yet what the impact is until quite some time, in terms of follow on side effects, both from the disease itself, but also the lockdown. So I'm quite worried about a lot of things there. But the crazy thing is that the tech ecosystem probably has never been stronger than it is today, right? So when COVID hit almost exactly a year ago, I remember we were just about to fly over to San Francisco to join the SaaStro conference. We had our suitcases packed. We're about to go on planes, and I canceled the trip literally hours before I was going to fly over, when it became just clear, almost by the hour, that something seriously is happening there. And then I think for just a couple of weeks, we were very concerned, not only about the world at large, but also what does it mean for several portfolio companies that were in the process of raising money, or where we knew they were going to raise money. And there was a lot of uncertainty, how would this work out if you can't even meet investors in person? But this was a very, very brief period of time only, for maybe just a couple of weeks. And then I think the founders and investors have really adjusted to this new reality very well, and turned out that you can do fundraising processes over the distance quite well, and in some cases even more efficiently. And then it also became apparent that a lot of tech companies actually benefit from an increased demand for everything that allows remote collaboration to online events, all of that. And then I think ultimately in the last couple of weeks or months, there is probably as much optimism in the tech world as there has ever been. And I don't know, maybe too much. We can talk about that too.
Yeah. So did you spend most of the past year in Germany? You're based in Germany, right?
Yeah, I'm based in Germany. I'm based in the southwest of Germany, close to Stuttgart. Our office is in Berlin, and we've always had a at least half remote setup. Like I live in the southwest of Germany. In normal times, I'm spent a good amount of my time here, but also some in Berlin, and then traveling all over Europe and sometimes beyond to our various portfolio companies. And Louis, who I'm sure you know, he attended also Demo Day. When was it? I think last week or
last Tuesday.
Started a lot, yeah. So he's always spent most of his time, or at least half of his time, in Paris, and then Pavel is spending time in Poland, but also Germany or London. So we've always been on the road a lot, and now kind of for the last 12 months, everybody's locked down somewhere. For me, it's south of Germany. For Pavel, it's Berlin. Ricardo is in Lisbon. Louis is in South Africa right now. Like, location basically lost any kind of relevancy, right? Because if you can't meet people in person anyway, maybe time zone still matters, but that's about it.
True. So we have prepared a lot of questions to learn more about the history of Point9 and the thesis that you're following at the moment. So, Balthazar, you can take over now.
Yeah. So first thing, I'm impressed by your Zoom setup. I was wondering whether you had that all along for many years. I don't think we ever did a Zoom together, but I can see that you perfected the setup.
I did improve it, yes. I mean, I've always have a bit of a passion for video conferencing technology, because we've always been working so much in a remote way. So we had to figure this out some time ago to make it work so that you can get good enough quality. But this year, or the last couple of months, indeed, I was impressed or inspired by a setup from another investor, Gary Tan, that I saw on Twitter, where he explained how he got great quality using a DSLR, and so I copied that, not the exact setup, but like the inspiration to actually use a DSLR instead of a normal webcam, and that is what gives you much better picture quality.
And so everyone can check the article you wrote to describe your setup. So it's online.
That's right.
Medium account.
That's right. Yes.
And so the first question I wanted to ask is: you started at a time where there were relatively few startups, especially in SaaS in Europe, and you built one of the only thesis-driven fund in Europe, which. Was that the reason you started investing globally, because of necessity to find startups in that model? Or were you already convinced that you could find the best entrepreneurs anywhere in the world?
I think it probably was both. Like, the fact that we were not looking at everything in the entire market, but relatively quickly developed a strong focus on B2B SaaS and online marketplaces, that probably contributed to us looking outside of Germany or even outside of Europe, because otherwise maybe there wouldn't have been enough interesting companies to look at. But I think we didn't really think about it that way in such a conscious manner. I think it was more like, it didn't occur to me that we could only look in Germany. I thought this would be totally absurd. And maybe that's because the two companies that I had started before were also like half remote, like some people in Germany, some people in other places, and also always like targeting a pretty global audience. So I think I just didn't think about the possibility that we could limit ourselves only to Germany. And even the first investments that I did were in places like Copenhagen and Edinburgh. in Canada, even New Zealand. So also we didn't in the beginning, we didn't have a lot of incoming deal flow. So we just looked for interesting companies that we might like. And when you look on the internet, you find interesting products or companies everywhere.
Yeah. It
And
was,
at the time, did you travel every time to meet the founders where they were, like down to New Zealand, so far away?
Sometimes we did, but sometimes we didn't. So, and in fact, New Zealand is one of those cases where we hadn't met the founders in person before we made the decision to invest, which maybe ironically prepared us 10 years before for what otherwise maybe we would have to have learned now with more time pressure, which I heard at least some other investors say took them some time to adjust to that, because maybe you think you don't really get to know people unless you meet them in person. We haven't really been struggling with that because we've always at least occasionally worked that way. I mean, we always like to meet founders in person whenever it's possible, and in most cases we do meet in person. There's just like obviously there's a lot of upside in that, and it's fun, and you do get to know each other in a different way when you just spend some time together or over lunch or dinner. But if it's if the company is in Australia or New Zealand, or if there is a lot of urgency, then we can also operate differently.
Yeah, there are two things that seems difficult for me to investing really globally. The first one is that at seed stage, you're mostly evaluating the founders, and I find that the cultural differences are not so easy to assess between a French founder that is probably good technically but doesn't know how to sell a large vision, and a UK or US founder that always seems like very impressive, at least to me. That's the first part. And then after investing, it's understanding whether the ecosystem in which the companies are based is going to allow the companies to mature as well as they would in a more developed ecosystem. Like, how do you assess both?
Yeah, I think there are several things to this. I would say one thing is that even though people in different countries and different cultures like maybe talk and behave in slightly different ways, and we need to adjust to that and accommodate for that. And I'll come back to that in a minute. Even though you have to keep that in mind, I think people in the startup ecosystem worldwide also share a lot of similarities. So I feel like I immediately have something to talk about with a tech co-founder, no matter if they are anywhere in Europe or the US or Canada. So I like when I have first calls with a founder, sometimes it occurs to me throughout the meeting or maybe even after the meeting, I didn't even know where they're based. I didn't even ask. So I think the location is not the most important factor in that. People are just different, and you need to try to understand them. Location is just one, or the cultural background is just one of many factors there. But it's also true that on average, I mean, exceptions prove the rule, but on average, people from the US are better at selling because that's apparently what they've learned when they go to school, do more show and tell than maybe people in Europe, and maybe even more so than people in Eastern Europe. So I think that's something that you learn by talking to a lot of founders, that you just try to adjust for that and not try to judge everybody with the same lens. And I think it also helps that we are a very international team ourselves. So Pavel is from Poland, so he can relate to people from Poland and maybe Eastern Europe in general very well. And Louis is from France, and I'm from Germany. Ricardo is from Portugal. Julia is from various countries, including like Switzerland and Philippines. Like she's a very interesting mix of nationalities. So I think we're like, trying to do our best there, and so far haven't really struggled with that a lot.
And do you find it's harder to succeed in foreign ecosystems? Like once you've got, like, let's say you've got product market fit, you're a team of 25, you need to enter that scaling mode where you're probably going to double your team every like 9 to 12 months. Is that possible in Australia?
Yeah, that's a very good point. And I think maybe the answer to that question is going to be different in a post-corona world than it was before, right? Because remote has become at least for now, it's the normal, and we can discuss if it will stay like this or if it'll go back to a certain extent. But I mean, this was a big concern, at least until a year ago or so, where remote was like not the default, and it was about the local ecosystem. And then you have a couple of ecosystems in Europe with a decently sized talent pool, and then if you go to like a second or third tier ecosystem, the talent pools get very thin. So that's definitely an issue, and in some cases it meant that some of the companies that we invested in moved, like Mambu or Contentful, for example, where they both had their roots in Stuttgart, close to where I live, but then they actually built the companies in Berlin and also had international offices at some point. And then you also have like many examples of companies that were in one of the best ecosystems in Europe, like Paris or Berlin, but still like the limited talent pools were one of the key reasons why they chose to move to the US, or at least start hiring a significant number of people in the US. So I think it'll be really interesting to see to what extent that is changing now. Like, to what extent is it easier to attract the best people on a global basis, even if the founders are physically located in Europe?
Yeah, it's a question that strikes me. Like a lot of I find like you, for example, and other writes like amazing content that helps a lot of entrepreneurs think about problems in a better way, I would say, or at least in a like state-of-the-art way. But only the interactions of the day-to-day with like fellow entrepreneurs actually lead to like a significant increase in like day-to-day operations, where I'll see like it's the tiny details that they exchange together that make the execution a little bit better, which I see happening for every company that we send to the Valley. They suddenly become good at product.
Yeah, agree.
Or things like this. Like, have you been able to build something like this at Point9 between like portfolio companies, or like do you try to engineer a way for them to actually talk about like trivial stuff and not just the thing that make us sound smart and we want to write about?
I completely agree with that. And again, I have to maybe again make a distinction between what the world used to be and what it seems like it's becoming now. And I don't know how it's going to continue. But until like a year ago or so, we were always really keen on encouraging founders from our portfolio to spend time, and a lot of time ideally, in the Bay Area, because you have this amazing concentration of experience, talent, a lot of people who are also willing to share. So I think everybody who spends time there benefits from surrounding themselves with the most experienced people. And we also see that a company like Loom, for example, which is now also remote, but which also started with founders in San Francisco, just has an ability to learn so quickly from people who, again, learned what they know now at some of the best companies in the world. So I think there was a big advantage of being in the Bay Area or going to YC to do all these learnings. And we've always tried really hard to enable these learnings in the Point9 family as well. Well, you have a family, we have another family with some overlap, fortunately. This happened mainly through our annual founder summits, where we always brought 150 to 200 founders and key team members, spend a couple of days somewhere in a nice location with a lot of like several tracks of programs, of discussions and speeches and presentations, but also just a lot of informal exchanges and interactions. So there was a lot of that happening at these founder summits and at smaller events that we've been doing throughout the year. And then we also facilitate that online over our Slack, over community on Slack, and at various online events. And now for the time being, obviously it's all online only, and it's working pretty well. Like there has been I think more and more engagement and people who help each other. Actually, in particular, or maybe not in particular, but at least not only the founders, but also, like, let's say a product manager at one company who has a question and then can learn from somebody who's a product manager a bit further ahead in their career or at a slightly later stage company. So there is a lot of that happening. I think the fact that it's now online has the benefit of not having physical constraints. So we can have thousands of people interacting there. But at the same time, there is also something really beautiful and special about just spending time together in person. So, and that is, some of this is, I find you can't really do that online. So hopefully we'll be able to do that again in person, either later this year or next year.
Yeah, I did come to one of the Point9 summits in Barcelona 2 years ago.
Cool.
I think.
Great.
I really enjoyed it. I was impressed by the density of smart people out there. It actually led to me meeting the team of Preply, which then led to us helping them raise the Series A.
Amazing,
Which are things I've never been able to replicate online. And I do find that online has a lot of opportunities, but for now I find that you need more people online to replicate the same type of interactions that you have offline. It's like the serendipity is different because you kind of need something explicit before talking. So to have the same like type of interest, instead of 20 people, you need like 200, which is a scale question that I ask myself regarding the family and how we can scale it. Nice. And you, all that content that you write, I guess, is a large source of the inbound that you get. But I remember from the Point9 Summit that you used to send a lot of cold emails to founders wherever they were in the world, just because they were doing something related to SaaS, like the Clio founder, I think. Do you still have this two-tier approach to inbound and to sourcing?
We probably do less of the outbound now than we did, and I guess it's mainly because the inbound deal flow keeps us busy nowadays. So we're always we often think that it would be great actually to do more outbound again, because that has worked really well in the past. But then again, it was also a very different time and environment. So maybe it's also both like due to the evolution of us as a firm, but also due to the evolution of the ecosystem, that maybe it was an anomaly that we were reaching out from Germany to a founder in Canada who was struggling to raise. I think it can still happen, but the market, maybe it's, I don't know, maybe the right way to say is that the market also has become somewhat more efficient. Yeah.
Yeah. But when you read the story of the Shopify founder, like out in Canada, you can see that there are probably still gaps in the funding market.
Yeah. And maybe in areas that I'm not aware of. I would love to find out what they are, because the things that used to be rather obscure, like SaaS, like 10 years ago or 12 years ago, this is like pretty much at the center of what everybody's talking about now. So maybe there are adjacent areas or new areas where somebody in Canada out there is trying to raise, and
that's really interesting. The question I have regarding that is, like, SaaS is getting known, the model is getting known by more and more people. There are more and more investors on the market, which puts pressure, and like investors start investing globally. So I see two things. I see on one end, people starting to be more comfortable with risk and paying higher valuations for companies that have proven less, especially if the business model says SaaS. And on the other end, you get large US funds starting to come in earlier also in Europe, probably like post-market fit, Series A. And you were just in the middle of that. Like, how do you find your positioning as like the angel investor? That was the tagline. And I've seen that you do maybe even more deals abroad. Is that because of the pressure, or is it because you find that the best entrepreneurs are actually based in these crazy locations?
So I think almost all of the companies that we invested in the last 12 months or so were in Europe, but all over Europe. So I think nothing has really changed there in terms of our geographic approach. And yeah, it's true that some companies, like, it's not all, but like it's a very specific type of company in the current market can raise at like large amounts of money at very high valuations, like companies that are just clearly growing really fast, but that's usually then past our stage anyway, right? Because we
like hop in from day one.
Yeah, or companies with like proven founders who've done it before, like 2 or 3 people who have a successful exit already under their belts. So I think companies with certain types of characteristics can raise very easily in the current market, and then maybe sometimes we still try to compete, and maybe sometimes we conclude it's just not the right fit for us. But I think we still find enough companies that also value what we bring. I think there are also maybe some things maybe in the market are also not sustainable, right? Like if large funds just like invest a couple of million here, a couple of million there without a lot of due diligence, it's easy money for the founders, but the question is, like, do they really get a long-term commitment and a lot of value add and work from a fund where it's an insignificant investment for them?
Yeah, definitely. I'll come back to that later, maybe. So VC like strikes me as a competitive business where you need to win your deals against other VCs or like and angels or whatever type of investor it is. And you mentioned before that you don't have the time to see every company on the market. So I'm wondering, what's your advice to founders that like operate in these competitive markets themselves? Like, is it a bad thing? Is it a good thing? Do you invest in very competitive markets?
Yeah, by competitive, you mean like not in terms of VC being competitive, but like the underlying
Yeah.
software market being competitive.
Yeah.
Yeah. I think
And I know you've done a
yeah.
lot of deals in where there is competition. There's maybe even a proven leader, like deals like Revolut or others where you've been super successful.
Yeah. I mean, I think we're always keen on understanding what's really unique about a company, right? And there can be something unique in a crowded space if the founders have some kind of insight on what they're doing differently that is going to change the game. So I think it's not like, I think it's a problem per se that if a market already has a lot of players, it always depends on the dynamics, like how fast is that market growing, how old are the dominant players, how good are they, or what maybe are some gaps in the market. And then sometimes quite often actually we invest in companies in markets that aren't that competitive yet, because maybe we didn't even know, and maybe most people don't know that they even exist, because they are like, you need very special industry or domain expertise to identify the problem and then come up with a solution. And this is, I think those are amongst the companies that we like the most, where the founders really have had to have some very special insight, which then gives them a head start over others who will then try to, because eventually everybody faces competition and there are copycats and so on. And I think the stronger the initial insight, the higher the chance that you have a head start over others.
Do you consider Loom in that category? Like I think for most people, it still feels weird to do screen recordings and send them. Maybe a bit less in this asynchronous communication world that started to appear with COVID. Like what was so particular about them for you to believe that it would become a thing?
It was really the simplicity and the beauty of the product. There are probably a million ways to record your screen, but Loom was really, really special. And I thought at the moment, I thought that they've really nailed the product. And I think they've I think they kind of created a category or a new type of video. If you see a video somewhere of a screen and a little bubble with a person in the bottom left, you know this is a Loom, right? And even though others have copied it, meanwhile, like Loom were the first ones to establish that. So it was really a lot of details, how the product looked and felt, and how simple they made it to share, which I think just showed how they were thinking about this as a way to communicate with videos, as opposed to being primarily a tool where you can record your video, your webcam or your screen. And then the team is just really very special. And I wrote a blog post about that too, how I fell in love with that company so quickly. And it was really one of these cases where we saw the product and thought this is really, really interesting. And then we had a meeting with the founders and basically knew that we really have to invest in this company. There's no way we can't invest in them.
Sounds like the Dropbox, it just works. For something that people had tried to do for a very long time.
Yes.
Where's the team based? The San Francisco, you said.
Yes. The founders are all based in San Francisco, but but the team is very distributed, like even before Corona, and now even more so.
What connects you to a team that's based in San Francisco? Is it because you have a reputation there and they really seek your investment, you as an investor, or is it because you spend a lot of time there and you mingle with the local crowd when there's no pandemic?
Yeah, I would say it's all of that. I've spent a fair amount of time in San Francisco, and when there is no pandemic, we all travel there frequently. And then I also think that there is also something like a global, or at least like North American and European tech or SaaS community. So again, like maybe the importance of being local is maybe it's not zero, but like compared to like being passionate about SaaS and being in this industry is like the being close geographically is just one component there. And I think because we have a couple of European companies like Algolia, or earlier even Zendesk, Screen, that started in Europe, but then moved to the Bay Area and became pretty successful there, that probably also contributed to us like starting to build a reputation in the Bay Area as well.
Is that advice to go, like, let's say like COVID stops, the God knows what that means, and we pray that it comes soon. Would you still recommend companies to move to the Valley relatively early on?
I really don't know the answer to that question yet. I think we'll really have to see how the world looks like post-Corona. Like before Corona, I definitely encourage a lot of founders to do that. We've seen the success at Zendesk, Algolia, Front, Screen, and Contentful. And I think in each of these cases, the founders would tell you that if they had stayed in Europe, they just wouldn't have been able to build the teams like at this speed and hire the caliber of people that they've been able to attract in the Bay Area. So I think for like Zendesk, for example, and I think the same for Contentful, or probably all the examples that I've mentioned, they just wouldn't be where they are today without having made that move. The big question is, how is that going to change now, where European companies I think have increasingly been able to attract people from the Bay Area or all over the world, because if you don't go to an office anyway, really like the perk of being with a team in the Bay Area kind of became irrelevant in the last 12 months. I think to a certain extent that will go back again a bit to where we were previously, because I think people will still enjoy being together in one office. And so I don't think that like San Francisco as an ecosystem is over. I don't think everybody will move to Miami, as the meme maybe says. So I think I still believe in the power of this ecosystem, but maybe it's less clear that you have to move there in order to attract the best teams. Maybe it has become sufficiently easy now. Easy is not, nothing is easy, but sufficiently possible to build great tech companies outside of the Bay Area. And obviously there have always been cases, like just a small number of cases, like Spotify, maybe one of the biggest ones, where you have built like huge companies that were not in the Bay Area, or at least not headquartered there.
Does it mean that because you're an investor in the SaaS businesses, and because San Francisco is so central in that space, and you really have to move there to build the right team and to have the right level of ambition. Does it mean that when you assess a founder, when you're considering an investment, you're already asking the question, would that person move to San Francisco, if necessary, with their entire family, and reorganizing their entire life with around such a radical move? Or are you open to diversity of choices from founders?
Yeah, I think maybe we've had this discussion in a few cases even before we invested, when it was a case where maybe we thought, well, for this type of company, it's particularly important that they will be able to move to the US one way or another. Everything around like developer tools, or for products where most of the early adopters for your product in terms of customers or partners are in the Bay Area. I think, it's not like this is part of our checklist, and we don't even have a checklist. So it's not like you have to be able to or be willing to move to the Bay Area. We're not really prescriptive about any of these things, and I think it's rare that two companies follow the exact same playbook as well, right? Like, so for example, Front, which you know well too, they moved to the Bay Area I think when they were 5 or 6 people, whereas Algolia much later in their lives. Like, the founders they'd been to YC, but then they came back and then built a team in Paris, and then significantly later, and Nicolas moved over. So it's not like there's only one way to do it and be successful. That being said, we obviously love founders who are willing to do almost everything to be successful, whatever that might be, and we maybe don't know what it is. I think with maybe 2 or 3 people in the founding team, that makes things also a bit easier. Like, if maybe one of them can't move because of the family situation, also because like if one of them moves, then who takes care of the people in Europe? So I think like Algolia might be an example of this, where Nicolas made the move with his family, so that shows the level of commitment there as well. And then there was Julien taking care of the engineering team in Paris. So that was maybe like almost ideal, but again, every company situation is somewhat different.
And about that, we had a question about exits, because a lot of people are lamenting in Europe about the lack of exits, the fact that we don't have those large tech, fast-growing tech companies that are able to gobble startups after startup. And so, does it make a difference in terms of exit opportunities where you are based as a company? And do you already see things changing because of the pandemic or not?
I think if you are a large, successful company, growing fast, profitable, then you can like realize that value probably regardless of where you're based. So maybe the question is more like what maximizes the probability of getting to that level of success. I think there have been a lot of European success stories, especially in the last couple of years. Like I don't know how many unicorns there are at the moment, but it's quite a lot of them, and also like companies that have not exited yet, so they can also go on and become much bigger. I think what Europe is really missing is like the really gigantic companies, right? Like an Amazon, and Apple, Facebook, Google, Microsoft, one of these. And I don't know when, I have no idea when we might have the first company of that magnitude in Europe.
Yeah, and for me, like Europe never had this acqui-hire mindset, especially because we didn't have these very, very large tech companies. Do you encourage your companies to buy other startups, even if they're pretty small, with price tags that we heard in the Valley, like 1 million per engineer?
I think once you've reached a certain size, I mean, maybe let's say around Series C, maybe sometimes a bit earlier, sometimes a bit later. I think at some point you typically start to look for potential acquisitions. I mean, those are usually relatively small then, like more in the acqui-hire category. But I think it can, of course, be a very interesting opportunity, a very interesting way for companies to like accelerate product development, especially in certain areas, and maybe buy some IP or knowledge, and therefore like grow faster or add resources more quickly than you would than you could otherwise. I don't know if there is enough of this happening to really materially change the ecosystem in a way of like, I don't know, providing some exit or liquidity opportunities for startups that are like maybe doing okay but aren't really going anywhere, because like you don't have like companies like Google that make hundreds of, I don't know if they do hundreds a year, but probably dozens a year of acquisitions.
And it seems to someone Nicolas interviewed that they were also sometimes very financially beneficial to the investors, because the acquirer would grow 10x, which would be a force multiplier to the initially rather small exits. Do you see the same thing with your portfolio companies where you get to sell them, I don't know, to Stripe that becomes massively big?
I don't think we had one of these cases. I think this is just, sometimes people get lucky, right?
Yeah.
And especially in the current environment or in the last 1 or 2 years where valuations have just grown almost across the board. But in the end, what we're hoping for when we invest in a company is that they will become that they will stay independent for a very long time and eventually become a public company. And if that doesn't materialize, then maybe an acquisition is a good option. But like we would never invest in a company with the goal of selling it again in a couple of years.
Yes, like investors always have this love-hate relationship with exits, where you hate the fact that it's capped because it's sold, but it's also the only way, one of the only ways to get some money back in the fund.
I think going public is a good way of addressing that, because it means that like early shareholders or investors can just like take some money off the table, but still benefit from the upside.
Yeah. So the trend was to stay private longer and longer and longer, which worked pretty well in the US. In Europe, I think it's even more of a problem because there is basically no liquidity, especially if you try to become public. We've seen the Hot Group, maybe Rocket Internet in Frankfurt, and there are a couple others, but it's very limited. Are you like a big proponent of companies getting public much earlier?
I think I don't have a view on that. The IPOs that we've seen were, I feel like they were at the right stage. So those companies like Zendesk, Delivery Hero, West Wing, like they went public when they were worth between $500 million and a couple of billions. So neither go public and become a tiny stock where there is no liquidity. So maybe you don't really have the benefit of being a public company. So it wasn't that, nor was it like the opposite case of, I don't know, maybe an Uber or some companies that, or Airbnb, that wait until they're worth 50 billion or 100 billion before they go public. So it felt like those IPOs happened at the right time, allowed those companies to tap into the public market investors, where you can raise hundreds of millions in a very fast and efficient way. But when it comes to maybe some pros and cons of staying private longer, I don't know. I'm not. You need to ask somebody with more experience on that.
So, but you have experience in investing. At least you've been investing for quite some time, and you started as an angel investor, and then you switched to becoming a partner in a VC fund. And you wrote about the switch from one to the other a few years back, explaining what you had lost in the process, but also what you had won. So can you lead us through the journey from angel investing to becoming a venture capitalist?
Sure, yeah. So I was doing angel investments for 1 or 2 years or so, and then I got to know Pavel through a mutual connection, Lukasz Gadowski, who was like an early player in the European ecosystem. He started a couple of companies like Spreadshirt, and then later on Delivery Hero. And so he connected me with Pavel, who at the time was already working together with Lukasz, investing out of a very small fund called Team Europe Ventures, which was kind of like somewhere between an angel investing vehicle and a fund, in that it was like about 6 million in size, mostly from private individuals. And then we got to know each other, and I became a small LP in that fund, and we did a number of investments together. And then I think like slowly but surely we thought that we, having done a lot of like co-investments informally, that we should maybe do this together for real and raise a bigger fund. And as I maybe wrote in this blog post, like the moment you start to invest other people's money, it becomes a real job, also a different type of responsibility and long-term commitment. But I didn't regret it. There is a lot of benefit in like having a team that where you hold each other accountable, and where you are not the only decision maker, but you challenge each other. And I also think it's an advantage for startups, and therefore also for us, that we can invest bigger amounts, which can give companies more runway and really move the needle for them. When I did those angel investments, I like invested, and then basically immediately the day after, you basically keep fundraising, right? And it's maybe a bit different in the environment today, where maybe you group a couple of angel investors and maybe you have 1 million too. But I remember that when I was doing only angel investments, you immediately think about the follow-on financing and how to secure that. Whereas now, if we invest 1.5 million or 2 million or maybe 2.5 in a company, it means that the company gets runway for 1 or 2 years. It doesn't have to worry about financing for some time.
Yeah, and you can raise a fund every 2-3 years. When on the other side, when you're angel investing, you need to wait like 8-10 years before you get money back to start investing again.
Yeah, I mean, raising a new fund doesn't mean that there is any money back from the previous one, right? So in terms of the...
Yeah, but you can keep investing.
Yes, that's true, yeah.
How do you divide your time between founder-facing time and raising funds from LPs?
So the latter is really doesn't cost us any time. Fortunately, it did in the beginning, obviously, right? Like the first real fund that we raised meant we had to do a lot of meetings, quite similar to founders raising their first round, and we didn't have a huge amount of track record, so it was a lot of effort back then, but because we've had some success early on, that became very easy. So we're really not spending time apart from the process, right? Like apart from like I say this, but our operations partner Alexandra would say, well, it's actually a lot of work to raise a fund, and that's true, but it's not Pavel and me or other partners like pitching and convincing people. It's just this whole process, which is significantly more effort than closing a fundraising round in a startup, as you probably know too. There's just the amount of paperwork and KYC and tax and all those things that I know nothing about. I know that's a lot of work for our operating partner and our operations team.
I had maybe one last very short question, because we're almost at the end of the hour. It is so, when you read the press about the tech world, especially in Europe, you read all those articles about the competition between the large cities, like is Berlin racing ahead of Paris, and is Paris catching up on London, and what about Amsterdam, and what about Stockholm, and whatever. So since you're lucky enough to have portfolio companies basically all over the place, are you aware of such a competition, or do you not care at all, and you see that as exactly the same world or the same group of ecosystems?
Yeah, I think it's not something we're worried about, or that we spend a lot of time with, like debating like the competition between ecosystems. Maybe because we will just invest wherever we see a great company, and I'm not even sure if there is a lot of competition between the ecosystems, because like competition for what? Not for capital. Capital moves everywhere. So it could be competition for talent. Yes, that's probably true. Like where founders start their next company and where maybe then they attract people. There is probably something to that, but it's also not a zero-sum game, right? So there are so many more people who could go into a tech in Europe who do something else, that I don't think there is a huge amount of like people in Paris taking something away from London or vice versa.
Okay, good. So to be followed. And Balthazar, do you want to add a word in conclusion? Otherwise, we can wrap it up.
I do agree with what Christophe says. I think more and more people should go into entrepreneurship and build businesses, whether it's in Paris, in the south of France, or in wherever now with remote work. There's enough money to accommodate for a lot of businesses, and there are enough business opportunities for anyone to start something. I think it might not reach 100 billion in valuation, but that's not the goal of entrepreneurship. And I hope one of these founders that join us at the family will then get the chance to receive investments from you guys at Point9. You've been really supportive investors for Algolia and a couple other companies in our portfolio, and we do hope to send you more very soon.
I love that. Yeah, thank you so much.
Thank you, Christophe, for joining us.
Yeah,
we'll edit the show and turn it into small bits, spread around social media. So we'll make sure to keep you aware of all that.
Great. Thank you, Nicolas. Thank you, Balthazar.
Thank you.
Thank you.
Cheers.
Talk soon.